The best Forex pairs for day trading. Let's talk about it. Hey liquidity gang, so in today's video we're going to be talking about the best Forex pairs for day trading. This is so subjective, everyone's going to have their own opinion about this. I'm definitely going to be biased because you guys know I only trade GBP USD and Euro USD, but I'm going to throw one more pair into the mix, and then what I'm going to do is I'm going to compare all three of them to show you guys certain characteristics that you need to look out for when choosing the best pair. This is all going to be based around the DXY. As you can see on my screen right now, you can see that I've got GBP USD here, I've got Euro USD, and I've also got AUD USD. I'm going to show you guys a specific part of GU, EU, and AU and certain characteristics of these. So I'm on AUD USD right now, and I'm going to go to the 25th of May. In my very last video, when I was talking about the DXY and talking about how when it traded up into the imbalance after producing an up close candle, that's when you should have been looking for the DXY to drop and Euro USD to rise. And at the same time, you should be looking for GU and AUD USD to rise at the same time too. And so this is what we're going to be talking about now. And so just to give you guys a quick refresher, it's going to be nice and quick. So what we had, I'm going to delete this one for now. You guys can watch the last video to find out what that was about over here. We had this imbalance on the 1 hour time frame. You can see it clean as day over here. And what I said was that the reason I was in that Euro USD trade was because when price traded up into here, I got that reversal sign that I needed to let me know that price was going to go down for the DXY. The DXY is the dollar strength index. If it's dropping, it means that the dollar is weak, and pairs like GU, EU, and AU should rise. Then I went into the 1 minute time frame. You can see this box here. This is that imbalance box. So you can see right in here, what else did we get? We had an up close candle that ran out liquidity to the left. The price then broke back beneath this low over here and traded back up into this up close candle, specifically within this imbalance over here. As you can see, I'm just going to remove some of this for now. It looks a bit messy. There we go. And I'm going to remove this box as well. There we go. It traded up into the imbalance, as you guys can see, and then it just plummeted. This is on the 25th of May. And now what I'm going to do now is I'm going to show you exactly what happened on GU, on EU, and on AUD USD, showing you guys some characteristics to help you guys choose which pair is best for you. I'm going to start off from AUD USD. I'm going to go to the 25th of May. So this is AUD USD right now. We're on the 25th of May. I'm going to go ahead and put my annotations on, and now I'm going to give you guys some certain characteristics of AUD USD. So first of all, you can see, look, AUD USD. So we traded down into our down close candle, which is what you saw with the DXY. It traded into its up close candle. It cleaned up some of this inefficiency, and then it took off. And so with AUD USD, you're going to be getting smaller stop losses. AUD USD is less volatile. So if you're that person that you don't want too much stress in your trading, you just want it to smoothly get there, then AUD USD is going to be your best friend. Some of my mentees trade AUD USD and they absolutely love it because there's minimal stop hunts. It just gets to their target. Normally there's a smaller stop loss of AUD USD. And what we're going to do, I know we're going for the imbalance, but what we're going to do is from this very high, which comes in at 43, and the very low that comes in roughly about 35, that's roughly about an 8 pip stop loss for the down close candle. So bear that in mind. If you traded from the imbalance, you're talking about a 5 pip stop loss. So generally AUD USD is going to give you a smaller stop loss, but what would tend to happen is that it moves less than the other pairs. AUD USD has smaller expansions compared to the other pairs. I'm just going to go for roughly about 50% of that. So you can see that roughly about 50% comes in at a 4.5 pip stop loss. But the expansion move was roughly about 79 pips. This was the intra-week high. You can see we had triple highs over here. This would have been your target from when you entered down here. From when the market flow switched, this would have been your target up here. So that's roughly about a 79, let's just call it an 80 pip move. So if you had an 8 pip stop loss, which was the up close candle roughly about there, that would have been a 1 to 10. That would have been a 1 to 10. And if you had a just under 5 pip stop loss, that would have been a 1 to 17 R trade, which is absolutely amazing. And then obviously that's obviously if you held it to there, you could have easily taken partials along the way and then collapsed the rest of your position above this high. So from the 25th of May, it came to its target right here on the 27th. So it was just 2 days, right? 2 days of trading and we got there. Just bear in mind, there's going to be less stop hunts, smaller stop losses, but smaller pip ranges. And so if you're that person, you don't have too much stress in your trading, you don't really want a large stop loss, then AUD USD is going to be your best friend. So let's move on to Euro USD. I know I touched on this in my last video, but we're going to go over it one more time real quick. This is once again the 25th of May, roughly about that 1:30 to 2 o'clock time. We produce our down close candle, running out liquidity to the left. We trade above this high over here. Then we get that retracement down into the imbalance, and then we take off. You can see from the up close candle to the very low, that's roughly about a 12 pip stop loss. You saw with AUD USD is roughly about 8 pips. You went from the imbalance to the low of the down close candle, that is roughly about an 8 pip stop loss. And then once again, if you're targeting the intra-week high, which is right here. You can see the intra-week high. That was the 22nd. That gave you about a 100 pip range. You're getting more pips out of EURUSD. So in other words, EURUSD expands further than AUD/USD. It's just that you have a larger stop loss. If you're looking to trade a pair that literally moves alongside the DXY to the T, then it'll be EURUSD. So that was EURUSD. I didn't really touch on that too much because we already talked about it in the last video. So guys, if you haven't watched that video, watch that one after this to catch the full scoop on how you could have capitalized and caught a 1 to 10R trade trading EURUSD and using the DXY as your measuring tool. Now let's go to GBPUSD. Now we're on GBPUSD. So one of the characteristics of GU is that it has more stop runs than AUD/USD and EURUSD. Now we're in GBPUSD. Put my annotations back on. You can see right here. So let's just break this down first of all. So once again, this is the 25th of May, roughly about that 1:30 to 2 o'clock. So this here is actually our down close candle right here. So from the very high of that down close candle, that range is about 11 pips. Normally it's larger on GU compared to EU, but right now it's 11 pips. And then if you caught it from roughly about 50% of this down close candle, so from the very high to the very low, then that would have been roughly about a 5.6 pip stop loss. The major difference between EU, AU and GU is that GU's expansion range is a lot larger. Whereas AU gave you roughly about 80 pips, EURUSD gave you about 100 pips, GU is going to give you a bit more. It's intra-week high, which is up here. That's the intra-week high. We had equal highs this time. And these are always going to be a drawn price. You see something like this, the moment market flow switches, this should be your target. That's the intra-week high. To get to this high, so let me just quickly mark this up right here. You see how high right here? I'll just put a line here just to make it a lot easier. You can see right here, that's 113 or 114 pips. So generally, GBPUSD is going to give you more pips. But the only difference is that GBPUSD likes to do more stop runs compared to AUD/USD and EURUSD. I could have been really biased and said, just pick GU. But I know everyone has different appetites towards trading. Some people might be less risky and want to just be in the trade stress-free, and that's normally those people who trade AUD/USD because it is less volatile. Then moving on to EURUSD, which is more volatile than AUD/USD, it gives you more pips. It just means that you might have to have a larger stop loss. And then when it comes to GBPUSD, GBPUSD is going to have a larger stop loss than them both normally, but has a much larger expansion range. This is another example of what we're talking about right now. So I've just put my annotations back on GBPUSD, and so this is what we were discussing a moment ago. This was the move that I caught so sweetly this week on GBPUSD. It was an amazing trade, absolutely amazing trade. I didn't hold the full position all the way, but if I did, it would have been a juicy 1 to 47R trade. But like I said, I did not hold it all the way. But guys, the reason I wanted to show you this was because I wanted to show you guys the distance in which it moved. So this is why if you're not to refine a stop loss and catch a decent move, you're Gucci. Just to show you guys once again the expansion range. I'm not going to go over what I took. What I was doing is I was targeting the equal lows here. Once we violated these equal lows, then I targeted the sell stops beneath that low and this low there. So I was just taking partials along the way as price was just dropping down. So from the very high to the very low, we're talking about 146, let's just call it 150 pips. So GU expanded 150 pips in one push lower. And this is on the 1st of June, by the way. This is on the 1st of June. And that was roughly about 11:20. Now I'm going to go to EURUSD and AUD/USD to show you the expansion range. So with EURUSD, so I caught my entry roughly about 11:20. What I'm going to do for EURUSD, I'm going to give it the benefit of the doubt to say this was the high, even though it wasn't. You can see it's at 210. 11:20 is roughly about here. We're going to go from this high to this low. That's roughly about 100 pips. So in other words, it moved 50 pips less than GBPUSD. And now I'm going to go over to AUD/USD to show you guys its expansion range for the 1st of June. So once again, GBPUSD's trade was caught around 11:20. I'm just going to go from the very high to the low just to give it the benefit of the doubt. And this is the 1st of June still, 1st of June. So its full range for the day is 74 pips. So now you guys can clearly see that each pair has a different expansion range. The moment you've all been waiting for. So for me, the pair to choose is GBPUSD because I like how volatile it is. I like that it gives you a larger expansion range too. I like to capitalize on that little bit extra when it comes to trading, especially when you can catch it with a really nice stop loss. So guys, that was the best Forex pairs to trade. Like I said, it's going to be very subjective. That was just my opinion. You guys might have a different opinion. If you do, drop it in the comments. And by the way, guys, this is the month of June. So it is a very, very special month for me. It is my birthday month. So in celebration of all of that, I'm going to be giving you guys 50% off my Forex course. All you have to do at checkout is use the coupon code BDayLiquidity, all caps, and you should get 50% off. The offer only lasts for the month of June only. This is a once in a lifetime opportunity to grab the course at this price. Peace.